Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. It's for educational purposes only. And it's my view of the markets. All right, now we got that out of the way. It's been a while. It's been 2 weeks since our last video. Okay. Once again, it's one of those scenarios where I don't need to be recording lots and lots of videos for you because I'm giving you the key levels on these videos. And you can kind of work from them. Because I'm showing you the strongest support levels, the strongest resistance levels, and quite frankly, the strongest zones to trade from. Okay, so what we're going to do, quick recap, and then I'll talk about the levels that I'm looking at next. Before we get into that, big shout out to My Crypto Funding. If you guys follow us on X, you'll see that we've partnered up with these guys. My Crypto Funding are a crypto and TradeFi prop firm. They have traditional markets as well. And now that we're partnered up with them, we've got you a 15% off code. So if you do want to use these guys, the code will be down in the description. You can get a prop account, and if you use the code Spitfire15, then it will automatically apply a 15% discount for you guys. So obviously they've got multiple options. A lot of guys in our group have been using these for a while. I've been playing with them for quite some time now. And we decided to form a partnership with them because we do like the service that they give. Okay, fast payouts, very little restrictions in terms of countries, and there's no hidden bad rules like some of the other prop firms. Okay, so for now, really like these guys. So obviously, if you want to try them out, use code Spitfire15 and you'll get a 15% discount. Right, now that's out of the way. Okay, so last time we spoke, okay, really simple. Really simple. We had two boxes. We had one box down here, which admittedly did get front run. Talked about this last time. And we had another box here. This was a red box. Let's get it on here. There we go. Right. These are the two zones. Okay. And again, this is why we've not been doing updates. Okay. Weeks and weeks ago, when price action was back here, I gave you this green box. Okay. And to be fair, I gave you this red box at the same time. Okay. Obviously, the last update we did, which was 2 weeks ago, we were trading here. This is the last update, the Thursday the 8th of May. We had very little reaction from the golden pocket, and it started traveling up through the rest of the algo. So the probability is we're in favor of higher prices. There was a local option where we could have taken the liquidity from these highs here, maybe a little liquidity run, and then reversal. Yeah. Wouldn't be my favorite setup, but it was an option. But in the end, all it did, as we can see, is it just went straight through. So I also said this on the same video. I was talking about, if anyone understands how I trade, especially with fibs. Fibs isn't my only tool. It's just one of many tools that I use. But fibs really tie into my Elliott Wave. So this is some free alpha for you guys. So pay attention to this, okay? When you've got a high time frame 886, in this instance, as I said in this video, this was the bear's last stand. Okay? Because once you start to reclaim the 886, chances are you're coming for the dominant high where you've pulled the fib from. Okay? As long as you've pulled the fib in the right way and you know how to use it. Okay? Same for a low. Okay? So the 886, in this instance, as resistance, is the bear's last stand. Okay? So if they're not going to fight and try to defend the 886, chances are it's going to come take the overall high. If this was reversed, and it was an 886 at the low, then once again, if the bulls weren't going to defend that, then it'd come for the dominant low. And it's the same. So this is something to really keep an eye on. The 886 is a really powerful level. You know, bang on about this in the group all the time for any of my students. So as you can see here, we came straight through the algo. So this area of interest did nothing. Okay, remember, area of interest, where do I want to do business? Here. Does it give me my valid setup criteria? No. Well, in that case, there's no trade, so I'm not losing money. This is what you've got to look out for when you want to be a trader. You know, there's a lot of traders that'll say, yeah, I really like this. This is great. Is this? I'm just going to leave a limit order here at Golden Pocket. Oh, wrong one. Do a short. I'm going to leave a limit order here at Golden Pocket. And yeah, then it's going to do this. And then they just sit there in it and watch it fade. It's because they haven't waited. So prices come into their area of interest. Cool. Now has it broken any structure? So far. High, low, high, low. High, high, high low, high high, high low, high high. It's still going uptrending. Uptrending. Simple trend. Okay. So therefore, the next thing was the 886. What happens at the 886? It touches the 886 and has a sell-off. So in this instance, there was a valid short trade here, and the guys in the group did take the short trade. Okay, it's the 886. It's likely going to cause a reaction, but the question is that the reaction then that comes down and starts breaking structure, which technically would be down here? Great, cool. You hold on to it a little bit longer. But for now, you've got to be cautious. You've got to think, well, I'm aggressively shorting against a strong trend. It's not breaking any structure, so aggressive trades deserve aggressive risk management. So therefore, once it starts moving away, you need to put your stops into profit, and you need to be looking at where you're going to be taking profits along the way. Okay, so really nice trade here. Since then, it came down, didn't lose any structure, started forming some sort of triangle again. We seem to be seeing triangles all the time at the moment. And then it continued up. Okay, and then once again, at all-time high, this was part of the same video. What happens at all-time high? Do you simply get above it? You see a load of breakout traders, and then it gets back down below it. Cool, there's a short trade. That's what happens. Again, this is where people with FOMO, and you'll see the influencers, as soon as this level's breached, everyone starts tweeting about it. Everyone starts posting videos about it. That's it. And they start coming up with some crazy big targets. And all they get you to do is leverage long FOMO on the breakout. What happens? It just hangs around. It's getting some absorption here. So therefore, there's bigger players selling into this, while the smaller players are trying to buy through it. And what happens? It just rolls over. And it rolls over quite aggressively. And all these guys that bought the breakout just got destroyed again. And then it comes back up again. And once again, this happened. Again, if you follow me on Twitter, you will see. You get the influencers. Breakout, breakout, breakout. And then it sells off again. Okay. Breakout trading is terrible. You get away with it on certain days. And it's very rare those days happen. They're trending days. And that's tied to a very specific thing. Really bad practice to get into. Okay, so now we are here. So what happens next? Okay, I am in a short from up here. I am still sat in my very small position, and I admit this, long from down here because I took bulk of the profits off. Okay, I have been skimming profits along the way. Okay, so now I'm in a position now is I don't care if this breaks down or if this continues up. The beauty of being in a hedge position. It means that my mind is nice and clear. So what happens next? Right. Let's just hide this. Let's talk about this. First and foremost, we've got to look at what support levels we've got. So the easiest way to do this is we throw on volume profile. This is trending volume profile. It makes no difference whether you want to use this tool. And again, I'm going to teach you something here. So you can either use this tool here, which is the anchored volume profile. I've just anchored this to the absolute lows. Or you can use the fixed range volume profile, which is this tool here. You'll find these in these menus. And just click once, drag it along, click twice. Okay, gives you the same thing. Depends how you want to look at it. I like this one because it can stay on my chart and it doesn't really interrupt my view. Now, we can see here, we're still not lost any structure. So structure still remains up. As long as we are above these lows here, we are still uptrending. If we start to break down below these lows, yeah, all of a sudden we've flipped to bearish. Does that mean full-on bearish and that's it? It's bear market and it's over doom and gloom? Could do. But it also might not. We don't know. We don't know. Realistically, you don't start getting overly bearish unless that low gets taken. Because that, at the moment, is the dominant low that started this uptrend. Okay? That was the dominant high that started the downtrend. This is the dominant low that started the uptrend. Okay? So it doesn't really start getting doom and gloom until that low goes. So for now, we're still pointing up. Okay, so if we do start to pull back and roll over, and again, I'm not saying I'm shorting here because I'm not. I've got no reason to. I'm quite happy to sit back and see what happens. But if we do come down and we continue to hold this and we hold structure, great, cool. Carry on trading the trend. If we do come up and we get above new all-time highs, once again, nice and simple, line on there, above new all-time high, current all-time highs, and then the same thing happens again. You mess around and you come back down. Great, cool, I'll short it. So once again, I'll know that there's a lot of breakout traders up here, and I can see that live on the order flow as well. But you also know from mass psychology, this is what happens. People love buying breakouts. That's why the majority of people lose. So if this happens again, great, cool, I'll look for a short. Okay, if not, and it continues up, the next level I'll be watching is 115k. And that's been on my videos for the past 6 months, maybe more. 115k. Does that mean I'm blindly shorting 115k? No, it doesn't. It means I'm watching it. Do I get a reaction there? Do I get a setup there? If not, then let it run higher. And in that case, we're looking at much higher targets, and that's fine. So, the two major levels to be aware of right now, I said this on this morning's stream to the members, this high and holding this range here. So for me, this could come all the way back down here and do this, and it's absolutely fine. Likewise, it could just come down, skim the top of the range, and then go like this. It's absolutely fine, I don't mind. What I want to see is I want to see it come into this area of interest, and then I want to see a sell. Does it give me a valid trigger for a long? In that case, cool. I'll keep long in the trend, no problem. Okay. If it doesn't, and it just goes straight through it, and it doesn't give me a valid sell, I'll let it roll. And if it does roll and start breaking some structure, then there might be new opportunities for shorts. Do I get an opportunity short here? I don't know, because I don't have a crystal ball. I'd love to. I'd love to be able to tell you, if this happens, there's your short trigger. But it doesn't work like that. It doesn't work like that. But quite simply, if we lose this, then where's the next sticky cluster? Just look at the volume profile. Well, your next sticky cluster is here. Right now, you've got this one, this one, this one, and this one. And in between, there's not much happening. So this is very little volume in between. What does that mean? Price moved through that area quite quickly. There was very little interest in people taking new trades within that. It's an inefficiency. So therefore, if we lose this one, then I'll be looking back down what happens here. If we lose this one, then I'll be looking down what happens here. All are valid longs. Okay, all valid. Does it mean I'm setting limit longs in all of these? No. So I want to see price come into those areas, and then I want to see what happens. Okay. And that's it. That's it. There's nothing really to go through apart from that. It's really simple at the moment, it's Bitcoin. It's not moving very well. For day trades, it's not that exciting. In fact, I'm having a much more fun time trading traditional markets at the moment because there's daily setups. Right now, I'm more interested in Bitcoin in a higher time frame perspective. So, hopefully you've learned something today. If you have, hit that like button. Do me a favour, leave me a comment down below. And until next time, gang, as you were. Bye-bye.